We are live now. We are live. If you are with me, let me know in the comment section. If you are with me, let me know in the comment section. We are live now. Okay, how many of us is ready for today's session? How many of us is ready? Are you ready? Are you ready? All right, drop a comment in the chat box. Let me know where you are watching from. Where are you watching from? Awesome, I can see Oceans 11. I greet you. Emmanuel from Nigeria, you're welcome. Oceans 11, you're welcome. Do how to share with your friends that we are live. Okay, Oceans from India, you're welcome. Nice to meet you. Nice to meet you. Nice to meet you. Today we want to have a live analysis on the current market movement, and we would start with Euro USD. All right, Euro USD. Today I would touch a bit into the impact of fundamental analysis and its importance to your trades. Dan Favor from Canada, you're welcome. Prajapati from India, you're welcome. I can see Pansari from India, you're welcome. Muhammad from Indonesia, you're welcome. Olaleyi Kodri from Nigeria, you're welcome. Azan from Nigeria, you're welcome. Mustafa from Nigeria, you're welcome. Noel from Nigeria, you're welcome. Moshood from Nigeria, you're welcome. Awesome. So, we would start with the top-down approach to trading. And let's start from the monthly time frame so that we can have a broader view of the market, okay, before we now streamline down to a clearer view on the lower time frames. I'm of the opinion or ideology that the higher time frame gives you a broader view of the market, of what is going on, okay, the general market direction, while the lower time frame gives you a clearer view as to what is currently happening in the market, okay, as to what is currently happening in the market. All right. Now, when we look at this overview of Euro USD from the monthly time frame, all right, we are going to carry out this analysis together. So this evening's today's class, we are all doing this analysis together. So if I'm going to ask you, what is the overall market direction or market structure of Euro USD? What is the overall market structure of Euro USD? What is the overall market structure of Euro USD? Who can tell me? Who can tell me what the overall market structure of Euro USD is? I want to know in the comment section. We need to be very, very active. What is the current market overview of Euro USD Thank you very much, Emmanuel. The downtrend. The current overview of Euro USD is downtrend. All right. Now, let's now look at levels on Euro USD that needs to be observed. When we consider market structure, we are looking at levels. Okay. First, we are identifying what market direction is Euro USD on, and we've been able to establish from what we can see that Euro USD is on a downtrend. Okay, good. I can see replies coming in. Downtrend. Good. Euro USD on the monthly time frame is on an overall downtrend. All right. Another consideration of the market structure is what are the levels that have been created in this market movement so far? What are the key support levels? What are the key resistance levels? Are we establishing these key levels will determine our next move. All right. So let's establish the key levels that we have on Euro USD on the monthly time frame. So here we can see a key support level turned resistance zone here. Now at this point we begin to have a clearer perspective of how the market has moved, how the market is moving, and how the market would most likely move. Okay. Now the next structure is another support level here. All right. We can also see another support level at this place. Now, what is this support level telling us is that it is keeping price from falling further. We can see obviously that price actually fell and broke out of this support zone. Okay. But in few months it was back into that support level. All right, it went above that support level and now creating some form of resistance at that level, because we can see that for the past 7 months, for the past 7 months, okay, consider for the past 7 months, price had been consolidating. 7 to 10 months, price has been consolidating at this same support level. All right. Now, looking at this overall market direction and the support level, all right, we can see market consistently declining in a downtrend. However, we are not ignorant of the fact that markets respect structures. Okay? Markets respect structures. And it would be very important to observe this particular structure here. Okay? Though this structure had experienced a breakout, but we can see that price is back into that support zone. I'm sorry, that support turned resistance zone are now resistance turned back to support, because you can see how price has been preventing it from breaking down further. And that is why we can see that the current month in which we are, which is October, is struggling, to even move downwards. Because if you are going to go by what we anticipate from here, from the candlestick, we might be seeing more bearish pushback. Okay? Because at this point here, where we have a minor resistance zone, which is to be observed. Okay? We have a minor resistance zone here, which is to be observed. We can see let me push it away so that we can see what I'm saying. We can see this candle. What do we call this candle? Who can tell me? what do we call this candle? This candlestick here. This one right here. What do we call it? What do we call this candlestick here? Like I said, this is an interactive class, so I would need you to be responding to me in the chat box. What do we call this candle? What's the name of this candlestick? This candlestick with a long wick upwards and a smaller body. Okay? Who can tell me? I'm waiting for someone to tell me what the name of this candle is. This candlestick with a long wick. Somebody said shooting star. Shooting star. Okay? Inverted hammer. Inverted hammer. Inverted hammer. Okay? Good. So it can be called inverted hammer. It can be called a shooting star. And it can be called a pin bar. Okay, so what we have here is an inverted hammer, also called bearish pin bar. And we can see that after this month was the month of July. After July had a bearish pin bar, which is the inverted hammer, we can see that the following month, which is August, was bearish all throughout. Okay, and the following month after August was September, which was equally bearish. All right, that is telling us that there is a bearish momentum playing out. Okay, there are bearish momentum playing out, and this bearish momentum, okay, is still very much around the corner. Okay, it is still very much around the corner, which is something we need to pay attention to. And like I said, this level is a minor, is also a support turned resistance zone. At this level here, it was a support, and finally it's now a resistance zone. Okay, so we can see that there is more bearish power, there is more selling power at this level than there are any other place. Now let's get back to shape. Now we can see what we have here. Now let's go down to the weekly time frame. Like I said, the lower the time frame we go into, the clearer our perspective of the market. Okay? The higher time frame gives us a broader view of what has happened, what is happening, and what will happen. The lower time frame gives us a clearer view as to what is currently happening in recent times. So we go to the weekly time frame. When we go to the weekly time frame, it gives us another picture. Okay? Another picture that we might need to look into, that we might need to consider. So we can see that on the weekly time frame, even price consolidated at this level. Okay? And now, obviously, this level became a very strong resistance zone. Okay? Because if you look at it on the weekly time frame, price had tried to break out from this level to no avail. Okay? Price had tried to break out from this level to no avail. So it's more like saying, if you observe this level, had this kind of movement in it. This level had this kind of movement in it. I'm coming. Okay? It had something that looked like an ascending triangle. Alright? But an ascending triangle that later failed. Okay? Now the ascending triangle has failed, and you see price broke downward, back to this general support level. Alright? Now, if you look through this place now, we want to be observant of the candlestick. Okay, now look at the candlesticks that have been formed all throughout the past few weeks here. They've been bearish, and now when you zoom closely into what is currently going on in this market, you discover that price had been lingering on this same level for the past 4 weeks. All right, this is this current week in which we are, last week, last 2 weeks, last 3 weeks. That is 4 weeks, and for the past 4 weeks price has been consolidating at this level. All right, what I see is the longer price stays at that particular level, consolidating just at this particular level, we will just see something like price consolidating like this and a breakout. Why? Because the more price consolidates at a support level, okay, the weaker the level becomes. The more price consolidates at a support level, the weaker the level becomes. The more price consolidates at a support level, the weaker the level becomes. All right, so when price keeps consolidating at this level becomes weaker and weaker. It is weak to keep holding it, and what happens? There will be a continuous fall in price. All right, so let's go deeper into the lower time frames to see what is going on. So for intraday trader, using multiple time frame analysis is a big advantage. All right, it's a very, very big advantage. So let's go down to the daily time frame. Now, here is the daily time frame. Now, I remembered prior to the price breaking down out of this channel, I had created, a trend line here. I created a trend line here. So that price coming here might push up to this level. So saying that expecting price to push up to this level, maybe then later come down to this level and then push up later. Also, I was expecting that if price breaks out of this trend, then we might see a continuous fall. Okay, and what did price do? Price broke out of the trend. All right, and now that price broke out from the trend, what did we see? A continuous fall. All right, a continuous fall. Now price is now at a support level. Okay, and like I explained, the more price keeps consolidating at this level, the higher the probability of it breaking out of this level. All right, the higher the probability of it breaking out of that level. So you can always, for those who are active day traders, all right, now you can always use this level where price has always gotten to and reversed in the past few days, which is this level here. Okay, all right, you can always use this level as a level to short the market back, because if you look at it in the weekly time frame, okay, in the weekly time frame, last week was bearish, then this week might also end up being bearish because of it's showing that the chart is showing that there is a lot of sell pressure at this price level. Okay, there is a lot of sell pressure at this price level. As you can see here, there is a lot of sell pressure at this price level. Okay, so this is telling us that if price gets rejected from this level, we might see price just continuously fall from this resistance zone. Because if you look at it consistently, price has always been pushed back from this level in the last few weeks. So when you now look at it from the daily time frame, you see it clearly. All right, you see it clearly how price would easily push back from here. Okay, now there are two things that can happen here. The high probability is price pushing back from this level, okay, and on the other hand, price breaks out of this level back to this level. Okay, so what do you want to do as an intraday trader? Let's go down further. So as an intraday trader now, it's now obvious that you can see how price has been consolidating at this level. If you can't see it, let me put something for you to see it. Let me change this color. Okay. So I just made it. Okay. Let me change the color. I'm coming. Good. Now you can see how price has been consolidating on all this level. Can you see? Price has been consolidating just within this range. Now there are two things that price we can do here. All right, and you have to watch it. Okay, one, price can decide to push back up. All right, price can decide to push back up, or price can decide to push back down. Okay, so as a trader, what do you do in scenarios like this? Patience is key, because in patience you become profitable. All right, so there are two things you can do. It's either you wait for a breakout of these two consolidation. Okay, you can either wait for a breakout of this level or a breakout from this level. If you are a swing trader, all right, if you are a swing trader from the first week analysis, where we see price at this level, you definitely want to sell. For every intraday trader, you want to sell. All right, because when you look at the overview of the market, it's giving you the bearish momentum. Okay, the overview of the market is giving the bearish momentum. You can always short from here, or you wait for a breakout of this level. So if you wait for a breakout of this level, all right, then you short at the retest. So imagine you wait and price breaks out downward and comes back to retest here, then you can short the market. All right, always prepare to short. Always prepare to take your trades, most preferably after a breakout. When price has consolidated for a while, always prepare to take your trade after a breakout. All right, you might not want to take your trade just within that range or when the price is still moving in range. You might want to take your trade when the price is already breaking outward to the upside or to the downside. So let's look at the 1 hour, the 1 hour time frame. So you can see that on the 1 hour time frame. Now the reason why I established previously that the lower time frame gives us a perspective, a clearer perspective into what is currently happening. All right, you can see a quick spike that went up, in an unusual way. This quick spike here is as a result of the news that came out some few minutes back. So let's check it out on let's check it out here. Let's go to today's date. Today is 19. This is Forex Factory. Today is 19. And as you can see, 5 p.m. Was the Fed speech. So the Fed, the Fed chairman Powell gave a speech, all right, and that moved the market, all right. As at 1:30, the unemployment claim news came out, and the actual, was was lesser than the forecast. It's less, that becomes positive, because now, of course, if unemployment is high, that's a negative effect on the economy. But when unemployment is low, it shows that there has been more job created. I don't know if you get the point. So that being said, the news that came out in 5 p.m. moved the market. All right. Now, so we can see why the market moved in such a very fast pace, and we can see the spike created on the candlestick. All right. So for anyone interested in trading Euro USD, if you are an intraday trader, then you are looking at let's look at this 1 hour time frame now. Okay, it's also consolidating with an unclear direction. The direction is quite unclear. As you can see, price has been moving in this dimension. Okay, it has been quite unclear. All right, as price has been hovering just within this box that we viewed from the 4 hours time frame. Okay, so if you want to swing, all right, you can always short the market. If you are taking trade on the weekly time frame, if you are a swing trader, all right. But if you are an intraday trader, you want to wait for a clear direction in the market to know if there would be a breakout to the upside, okay, or a breakout to the downward side. So if you have any question with regards to this analysis on Euro USD, let me know in the comment section. If you have any question with regards to this analysis, let me know in the comment section. Let me know in the comment section if you have any question with regards to this analysis. All right, drop your question in the comment section. Drop your question in the comment section. Intraday, which time frame to trade? Yeah, for intraday traders, you can use the 1 hour time frame, the 4 hours time frame, the 30 minutes time frame. Yeah, you can always use that. So of course you use it to get to know what is currently going on in the market. All right. Someone said, can you give us an analysis of a sure buy or a sure sell in the market? There is nothing like a sure buy or a sure sell. All right. So when you are in the game of trading, it's largely based on probability. All right. But the interesting thing is that you can have an analysis that has a higher probability trading strategy. All right. So which means what you are trading, all right, or your analysis is based on higher probability. What you factored in, levels you've mapped out, okay, structures you've looked into, is creating a scenario of more of a win scenario than a losing scenario. All right. So if you have a strategy that helps you win 80% of the time, there is also a probability of what? Of 15% loss. I don't know if you get my point. So there's nothing like a sure or 100% buy trade or sell trade. You can equally buy and it goes to hit your stop loss and then still goes back in your direction. All right. Now, what makes you profitable is you understanding the strategy that works for you. All right, because that is more reason why we are putting out this educative content. All right, is to find out the strategy that works for you. You can streamline yourself to a basket of currencies, not just trading almost 15 different currency pairs. You can streamline yourself to either trading only Euro USD, USD JPY, or just trading only the major currency pairs. Or you want to just trade two major currency pairs, two exotic pairs. Or you want to just trade, trade specific, currencies. Now, your ability to now master your strategy with these specific currencies, understanding the fundamentals around them, what kind of news actually moves this particular currency. If you look at Euro US, if you look at the dollar, you definitely know that inflation news moves the market. That's CPI. Then non-farm payroll moves the market heavily. All right. Then followed by gross domestic product. That's the GDP. And then followed by the speech from the Fed chairman. So these are core things that actually moves the market. So imagine if you are on your sure buy or on your sure sell, like you said, and the market and the news comes out and change the pace of the market, then is your analysis still a sure one? So you want to always work with a mindset of having a higher probability trading strategy, so that There's nothing like, oh yeah, buy this thing is going to buy 100%. No, 100% of the time, no. All right. You can always get an instruction to buy and it equally goes in that direction. Doesn't mean that it will always go in that direction. So I want you to take away the mindset of a sure buy or a sure sell. Okay, good. Someone is asking a question. It says stop loss hunt as regards when price breaks to any direction. I know how it feels. So when somebody says stop loss hunt, what this individual is trying to ask here, that's wisdom. What wisdom is trying to ask here is that wisdom is saying there are scenarios whereby when you set your stop loss, so let's say I pick a sell here, I sell from here, all right, and when I sold from here, all right, I put my stop loss up here because I'm thinking, okay, what if market comes back, hit my stop loss, this is the amount I'm ready to lose. Okay, and market then goes to that your stop loss, kick you out of your stop loss, all right, and then starts going in the direction that you had initially analyzed that it would go to. That stop loss hunt. How do you manage that scenario of stop loss hunt? Now, setting your stop loss is based on your discretion. Based on your discretion in the sense that you are setting your stop loss based on your level of risk exposure. All right. To what extent do you want to expose yourself to risk? That will now determine the level of your stop loss. And that you put your stop loss at a particular level and market goes there and kicks out your stop loss shouldn't stop you from using a stop loss. Okay, the reason is because the time or the day you might think, oh, let me remove this stop loss and see what the market will do. The market then keeps going in that opposite direction and you keep heaping losses upon losses upon losses. All right, so your stop loss, you can always set your stop loss based on market structure. Okay, so if I am selling from here now, I want to set my stop loss at the next resistance level. All right, a little above the next resistance level, like somewhere here, a little above the next resistance level. Okay, somewhere here I want to set my stop loss somewhere here, a little above the next resistance level. All right, you can also set your stop loss based on pip values. All right, how many number of pip do you want to risk? Okay, based on your lot size. Say, okay, I'm putting so and so lot size and I'm putting 200 pips value away from my entry level. I'm putting my stop loss 200 pip away from my entry level, and I'm putting my take profit 400 pip away from my entry level. So that can determine where you put your stop loss. So by doing that, you can equally always manage and control stop loss hunts. All right, good, because definitely the stop loss wants to go, the market might wants to go back to that level of resistance. So if you put it exactly on the spot of that level of resistance, let's say you now put your stop loss exactly here, so if the market comes here now, it is faster to kick you out than when you put it a little above it. I don't know if you get my point. So when you put the stop loss a little above the next resistance zone, okay, you will discover that you will seldom be stopped out of the market, except for random news comes out and kick you out. And that is why when trading, you need to factor in the news to know, so that you are not picking trade 20 minutes 1 hour to when a news will be released. Wow, today's class is very interesting because there are so many questions here. Ocean is saying we will waiting for a candle close. I didn't get that question. Okay, someone, Francis, is asking how many currencies can I trade at once? So, for if you are a beginner, even somebody who is professional, that you are professional doesn't make you profitable. So, imagine you are trading 20 basket of currencies or 10 basket of currencies. You are distracted because only you want to follow the news on Australian USD, only you want to follow the news on New Zealand dollar, only you want to follow the news on the Japanese yen, only you want to follow the news on this, only you want to follow the news on that, and equally following the market can be so it can mess with your mental health. All right, so what do you do? For me, I trade just three currencies. I trade just three currencies. Okay, which are Euro USD, GBP USD, USD JPY. These are the three major currencies I trade. These are the three major currencies I trade. All right, there are people who only choose to trade gold, nothing else. They only trade gold, nothing else. Okay, I think recently I added Australian USD. Yeah, I recently added Australian USD. All right, so these are the top three. So you always see me look out for market opportunities in these four currency pairs. So at first I started with only Euro USD. Later I added GBP USD. After a long time I added USD JPY. And currently I added Australian USD. So if you focus on just two currencies, three currencies is okay. All right, for you to have a firm grasp of your strategy, a firm grasp of each of these market specializations, a firm grasp on understanding what moves the dollar. Okay, understanding what moves the dollar. I hope I've answered your question. Someone is asking, where likely is the Euro USD going to reach before it retraces? So right now you can see that it is definitely ranging here. All right, now if it is going to break out, okay, if it is going to break out of this level, it will most likely come to touch this level. It will most likely come to touch this level because now this level now is the next resistance zone. This level here is the next resistance zone. All right, after this level here is now this other level. All right, this other level here. Okay, so if it gets to this level, might retrace a bit, but if it gets to this level is a key resistance zone, so it will definitely retrace a bit, either continue going up or continue going down. Someone says, okay, thank you, sir. Another question says, the Fed is the US, right? Yes, that's the central bank of the United States. A positive Fed news should make Euro USD bearish, not bullish, as the news means. Yes, absolutely, Joseph, absolutely. So when news is positive for the US dollar, all right, it makes the market, it makes Euro USD bearish, and when the news is negative for the dollar, it makes Euro USD bullish. So Joseph is right. Okay, Wisdom said, thank you for the stop loss on. My next question is, can ICT concept and top-down analysis be used together to analyze the market? So it depends on you, on what strategy you want to deploy. You know, I cannot say if it will work or if it will not work because I've not tried it out. Of course, you can always backtest these strategies with a demo account and see how it plays out, before using them on a live account. All right. I hope that answers your question. Okay, thank you very much. Moshood is asking, what time frame is good to trade? Now, any time frame is good to trade. It only depends on you as a trader. Okay, are you an intraday trader, which means do you want to just trade within a day and have the market close within that same day, or you want to trade, you want to hold your trade for weeks, for months, and all. So the type of trader you are depends on what time frame you want to play around with. So if you are a swing trader who loves to hold trade for a long time, for weeks, for days, you might want to focus on the weekly time frame, the daily time frame, likewise. All right, that's the monthly time frame, the daily time frame, and the weekly time frame. If you're an intraday trader, the 1 hour time frame, the 4 hours time frame is your friend. So each of these time frame is peculiar to your trading strategy and the type of trader that you are. All right, I want to believe that you've gotten value from this live trading session. If you've gotten value from this live trading session, drop in the comment section. Thank you, Octa FX. Thank you for this webinar. Let me know in the comment section if you got value. Drop in the comment section. I got value. Thank you, Octa FX. I got value. Thank you, Octa FX. Let me know in the comment section. I'm waiting for your response in the comment section. If you get value, let me know in the comment section. I got value. 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 Let me know if you got value in the comment section. I got value. 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 If you got value, let me know in the comment section. I got value. I'm waiting. I'm waiting. I'm waiting. I'm waiting. I got value. I got value. Okay, I'm waiting. All right, I'm waiting. Okay, I got value. Thank you, Octa FX. I got value. Thank you, Octa FX. Awesome, 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 awesome. Yes, so stay tuned for our next session. We have several webinars coming up, so definitely we'll be giving out promo code soon. Okay, soon. So just stay tuned. So thank you very much, Jude. Thank you very much, Olawale. Thank you very much, Rashid. Thank you very much, Wisdom. Thank you very much, Andra. Thank you very much, Rashmi. Thank you very much, Francis. Thank you very much, everyone who has joined us for today's session. Thank you very much, Kanyen. We'll be having this same session every Thursday and more other sessions that we host every other day in the week. We look forward to seeing you joining us on each of our live sessions. Thank you very much for joining this one. See you next time.